Yeah, welcome to all the participants for taking the time out today. My name is Gautam Upadhyaya and I'll be taking today's session. आज का सेशन जो है काफ़ी इंटरेस्टिंग टॉपिक के ऊपर है दैट इज़ मैनेजिंग रिस्क इन वॉलेटाइल टाइम्स। तो आप देर आर लॉट ऑफ ट्रेडर्स हु आर ट्रेडिंग करंटली इन द मार्केट, जिन्होंने देखा रहेगा कि मार्केट काफ़ी वॉलेटाइल है। स्पेशली आज अगर कोई स्क्रीन के सामने रहा रहेगा तो they could have clearly seen that Bank Nifty in the last half an hour of trade witnessed a movement of almost 700 to 800 points just within 10 to 12 minutes. So the reason for this is quite obvious. VIX काफी बढ़ चुका है and there are a lot of other factors which have attributed to the volatility in the recent time. So आज का सेशन जो है it is mainly regarding the volatility in the market and कैसे हम लोग ये करंट सिनारियो में ट्रेडिंग कर सकते हैं. How can we make best use of this particular scenario? So that is the main context of today's session. So without wasting any further time, let's get started with the session. So आज के सेशन में ये ब्रॉड टॉपिक्स है हम जो कवर करने वाले हैं. फर्स्ट इज रिगार्डिंग हिस्टोरिकल ट्रेंड ऑफ विक्स. तो विक्स का ट्रेंड का क्या रहा है जनरली एट द टाइम ऑफ द इलेक्शन सीजन. फिर हेजिंग करने के लिए आप कैसे कर सकते हैं, हेज कैसे कर सकते हैं आपके पोर्टफोलियो को ऑन अ ब्रॉड बेसिस, दैट विल बी डिस्कसिंग. पोजीशन साइजिंग के ऊपर भी हम लोग डिस्कस करने वाले हैं रिगार्डिंग एट्रीब्यूट्स ऑफ why position sizing is extremely important in volatile times. Then we'll also be discussing regarding strategies and strategies that you can use in derivatives during volatile times. एंड फाइनली हम लोग इसके बारे में भी डिस्कस करेंगे कि डेरिवेटिव्स में आपको क्या ध्यान रखना चाहिए जब भी आप ट्रेड कर रहे हो डेरिवेटिव सेगमेंट में, और मार्केट जब भी काफी वॉलेटाइल रहता है. दैट आल्सो विल बी डिस्कस्ड इन टुडेज सेशन. ये सारे ब्रॉड टॉपिक्स हैं जो हम लोग आज के सेशन में डिस्कस करने वाले हैं. सो विदाउट वेस्टिंग एनी फर्दर टाइम लेट्स गेट स्टार्टेड विद द सेशन. मैं सेशन को बहुत ही सिंपल रखूंगा एंड आई कीप इट अ मिक्स ऑफ बोथ इंग्लिश एंड हिंदी, टेकिंग इनटू कंसिडरेशन द ऑडियंस एंड पार्टिसिपेंट्स को जिनको भी कोई क्वेश्चन है रिगार्डिंग द पर्टिकुलर टॉपिक, वील बी अटेंडिंग टू द Q&A एट द एंड ऑफ द सेशन. तो पार्टिसिपेंट जिनका भी कोई क्वेश्चन है रिगार्डिंग द टॉपिक, प्लीज आस्क एट द एंड ऑफ द सेशन. पार्टिसिपेंट्स ऑल्सो डू नोट कि हम लोग कॉन्स्टेंटली फ्रॉम द SBI रिसर्च साइट वी कॉन्स्टेंटली शेयर आर व्यू ऑन द मार्केट का जो व्यू है निफ्टी का, बैंक निफ्टी का, सारे इंडाइसिस का, हम लोग रेगुलर बेसिस पे वी कीप ऑन शेयरिंग इट विद द टेलीग्राम ऑन आवर टेलीग्राम चैनल एज वेल एज आवर ट्विटर हैंडल. सो participants, अभी किसी को भी if they are interested in accessing our view, kindly join our telegram and twitter handle. तो ये सारे चीज जो है फ्री ऑफ कॉस्ट है, there is no charge associated with it. So you can make best use of the reports. आपको कैसे एनालाइज करना है हमारे रिपोर्ट्स को, what best and how best you can utilize it is at your end. But this is the content. We have a lot of good content that we regularly share with our clients based on the market view that we hold. So whoever wants can kindly join our Telegram and Instagram handles. So now let's start with today's session. So पहले हम लोग डिस्कस करेंगे एक बार वॉलेटिलिटी के बारे में, विक्स दैट इज. देख लेते एक बार कि हिस्टोरिकली विक्स का पैटर्न कैसा रहा है. It is very important to track. It is very important to track historical India VIX, so you get an idea ki what generally happens when a major event like the election is around the corner. So just let's track the historical chart pattern of India VIX. India VIX is also known as the fear index. I'll just briefly explain regarding VIX as well. So काफी लोगों को इसके बारे में उतना आइडिया नहीं रहेगा, but there will be a lot of traders who will be knowing about it also. So first we'll just go through the chart pattern regarding India VIX and then we'll discuss briefly regarding the same. So ये 2014 का India VIX का pattern है. So see, the main thing to note is whenever there is such a big event round the corner, volatility जो रहता है market में generally tends to increase because it is a large event. It will have large implications on the market. And VIX that is there, ये जो है इट इंक्रीजेस इफ देर इज बाइंग ऑफ ऑप्शंस, जो हम लोग कॉन्ट्रेरियन इंडिकेटर बोलते हैं इसको, इंडिया विक्स. it tends to increase when there is sharp buying of options in the market. Option buying can either be call option or put option. ये दोनों में से एक हो सकता है. It is not necessary that VIX will increase only when there is put option buying. But now let us understand why it is known as the fear index and why generally it tends to have an inverse correlationship with the market movement. This is before going into the details of today's topic. So it is important to understand this particular topic in clarity. VIX जो है is a very important topic for traders to understand. See, almost 80 to 90% जो traders रहते हैं market में, उनका position जो रहता है that tends to be on the long side. सबका cash में position रहता है या फिर 90% of the traders generally tend to have a long position in the market. Now a big event like the election is around the corner, or any big event comes into the picture. Now if you want to hedge your portfolio, the only option available to you is to buy put options and hedge your positions. See, when there is panic, that is the only time you will go ahead and rush and buy put options. If the markets are gradually increasing on the upside and your portfolio is also a long portfolio, you will not be worried about hedging. आपको कोई टेंशन नहीं रहेगा, आपका पोर्टफोलियो ऊपर जा रहा है, everything is good. But there are large fund managers in the market who have large exposure in the cash market, and they feel that whenever there is such a big event or whenever there is a major event, it is better to safeguard the positions to an extent at least. So at that point of time, they consider to buy put options and hedge their existing portfolio. So that is the reason we see that whenever there is a major event around the corner, there is sharp buying of options, especially put options, which results in India VIX increasing on the upside. So I hope you have got the basis of why VIX generally tends to increase when there is a major event around the corner. VIX is calculated by taking out of the money options, मतलब बाहर के जो options रहते हैं, not at the money, and that too not the current month. It is taking into consideration the next month options into consideration. It's slightly a complex calculation. You don't have to go into the details of it. ये वैल्यू जो है readily available है, NSE का इंडेक्स है ये. They also, it is not a proprietary index, they also have taken it from CBO index and they pay accordingly. But it's important to know that it is India VIX is based on the Nifty options, and the next month options are taken into calculation and the calculation is done. So I hope everyone's understanding is clear that VIX tends to increase when there is sharp buying of options. Option buying can either be call option or either buy put options. Generally, people do not rush forward and buy call options because there is nothing to hedge on that side. Like I mentioned, majority of the people have a long position in the market and they want to hedge those portfolios. So fund managers who have huge exposure in the market, they just deploy a small percentage of their capital and purchase put options to hedge their positions to a certain extent. You cannot hedge your portfolio completely, but definitely to a great degree you can hedge it. So that is why there is a buying of options, which results in India VIX spiking up. So in 2014 also we saw VIX increasing from around 10-12 levels all the way towards levels of around 32-34 levels on the upside. Likewise 2019 इलेक्शंस के पहले भी विक्स में हमने काफी एक अच्छी रैली देखी गई थी, because people tend to have a fear. No one knows the exact outcome of the election results, even though there are parties who may claim majority, but it is not known until the final voting comes actually. So this time also on June 3rd, on June 4th, the election outcome will come. So till that time, definitely there will be volatility in the market. There is going to be sharp movements in the market. And that is why in the current scenario as well, we have seen India VIX increasing on the upside. So this is 2019. We clearly saw in 2014 also India VIX went up. This is 2019. Once again, VIX went up from levels of around 8-10 levels all the way towards 30-35 levels on the upside. And वापस हमने देखा just before the election in the current year, that is 2024. Once again, we have seen VIX spike up from all the way from levels of around 8-10 on the downside. Currently, we are at 20-22 levels. So still there is a bit of chance for VIX in the current and next week to increase on the upside. Another interesting fact regarding VIX is, when VIX was there, there are almost 9 instances where VIX has rallied from levels of around 8-10 on the downside all the way towards 35-40 levels on the upside. Out of these 9 instances, in 6 instances we have seen a direct correlation. Matlab VIX has increased on the upside and Nifty has seen a correction on the downside. So that is an inverse correlationship. So that has been seen 6 instances. In 3 instances, what has happened is VIX has increased on the upside and Nifty also has gone on the upside. And out of those 2 instances, that has happened during two election 2014 outcome and the election result of 2019. So the point that we want to highlight is, just because VIX is increasing on the upside, it does not mean that there will always be a correction in the market. So different scenarios have different outcomes. It is important to note that there will be volatility in the market, but it is not an absolute certainty that just because VIX is increasing, Nifty may correct on the downside. Because generally, अगर आपने किसी ने भी market track किया है, the reading that they have done or anyone's commentary that they have read generally states that when VIX is increasing, markets tend to correct on the downside. But we want to highlight that there are certain instances when VIX has rallied from almost levels of 810 on the downside all the way towards 30-35 levels on the upside. Still, the markets have witnessed positive momentum, and 2 of those instances out of 3 have been during the general elections, that is during 2014 election outcome and as well as 2019 election outcome. So we'll have to see the current scenario, how the market pans out, whether there is a correction or there is a continuation of the rally this time as well in the market post the result outcome. So that's a very interesting data point. Now let's move to the past performance of Nifty during elections. So elections has been associated with volatility in the market. So आप देख सकते हो, see, these are things which always come and go. So you should not worry majorly regarding them. अगर आप देख सकते हो 2009 में निफ्टी का परफॉर्मेंस was extraordinary post the election outcome. The reason for 2009 being an outlier year is 2008 में financial crisis हुआ था. So there was a already very sharp correction in the market. The index itself was trading at very cheap valuations. So the type of rally that you are seeing is not because of Nifty performing so well. It is just that the overall markets were witnessing a rebound rally in the scenario. तो इसके कारण आप देख सकते हो 2009 is an outlier year. मतलब the base value of the index was at very low levels. So from there, if you see 6 months before, we witnessed a rally of nearly 43%. After the elections, we witnessed a rally of nearly 19%. And 6 months after the election outcome, also we witnessed a rally of 36%. So all in all, if you can say, just in about 13 months time frame, we witnessed a rally of more than 100 and 120% in the market. Coming to 2014 and 2019, so these are more relatable years. So it is what we want to highlight is that just because there is volatility, it does not mean that there will be a correction in the market. Volatility does not mean correction. It generally means that there are sharp movements in the market. किसी को नहीं मालूम रहता है कि वो मूवमेंट नीचे की तरफ आ सकता है या ऊपर की तरफ आ सकता है, बट वी शुड बी प्रिपेयर्ड फॉर एनी सिनेरियो व्हिच कम्स इन आवर वे. So that is what we are trying to highlight in this particular presentation. So the next topic is regarding hedging your portfolio. So hedging your portfolio is extremely important. So now let's look at a slide how to hedge your portfolio. See, assuming that there is a trader who has a portfolio in the cash segment of different values, we have highlighted different scenarios of how many put options that a trader should consider to hedge his existing position. So if you have a portfolio of 10 lakhs and you want to hedge your existing position, so I'll explain the scenario that we are thinking of. So currently markets are at 22,600. Assuming that there is a negative scenario for any XYZ result, just not results, it can be any event which comes along the way, which could result in a correction in the market. So assume that there is a 5% correction in the market. So 5% correction means a correction of nearly 1,100 points. So if there is a correction of 1,100 points from the current scenario, that is Nifty corrects from 22,600 all the way towards 22,500 levels on the downside, and you have a position in the cash market, that is you have equity portfolio, then you can consider to hedge your portfolio, taking into consideration that there is an event lined up. So if you have a portfolio, these are the different lot sizes that you can consider to hedge your existing portfolio. So take the scenario, markets are at 22,600. You can buy and deep out of the money option. See, hedging does not mean that you will be able to protect your entire capital. It means that you will be able to protect a certain percentage of your capital. If you go to hedge your entire portfolio, there will be no loss, no profit, and that is not the purpose of hedging. Hedging purpose is to protect your capital to a certain degree. You can never be able to protect your entire capital. If you go to do that, there will be a cost associated with it, and ultimately it will be a loss itself, because hedging never comes free of cost. There is a cost associated with hedging, and if you hedge it 100%, that means there will be no profit, no loss. If the markets go up, you will be 100% hedged, you will not make money. If the portfolio comes down, you will not make a loss, because in the cash market you will make a loss, but you are hedged. That means your put options will give you such a position that you will recover all your losses. So that is not a scenario that you want. You cannot do 100% hedging. It will not serve any purpose, is what I want to say. So take the scenario, like I'll just explain this situation in a more clear manner. We have a 10 lakh portfolio. Markets are currently at 22,600. Assume that there is a 5% correction in the market. The index corrects from 22,600 all the way towards 22,500 on the downside. So that is a correction of 1,100 points. Now take the scenario that we have to hedge our portfolio against the election outcome, because elections are the verdict will come on 4th of June. So we have to buy a put option of 6th June expiry, because that is the Thursday which comes during that week. So 6th June put option is what we have to consider. At the current scenario, 22,000 put option of 6th June expiry is currently quoting around 200 rupees. So 200 is the premium of the 22,000 put option. So 22,000 put option is currently quoting 200. So 200 into 25, which is the current lot size of Nifty, into two lot sizes, because if you want to hedge your portfolio, the notional value of one contract of Nifty is around 5,50,000. So to hedge a portfolio of approximately 10 lakhs, you will require around 2 lots. So आप 2 lot buy करते हो. So the total cost is 10,000 rupees for you, because there is a cost, like I mentioned, there is a cost associated with hedging. So the total cost associated in this particular strategy is around 10,000 rupees. This is for 10 lakh situation. I will not go to explain the rest of it. It is all interlinked. अगर आपके पास 25 lakhs का portfolio है, then you can consider to buy 4 lots. Likewise, if you have a 50 lakh portfolio, you can consider to buy 9 lots. The logic behind the lots is you have to multiply the current value, that is the strike price, into the lot size. So 22,000 into 25 is around 5,50,000. You get the notional value of the contract. So that is how we come up with different quantity of the lots that you require to hedge your portfolio. तो अगर आपके पास 1 crore 50 lakhs का portfolio है and you want to hedge it to a certain extent, you will require about 27 contracts to purchase. So now take the scenario that there is a 1,100 point correction in the market. To purchase the 22,000 put option, you pay a premium of 200 rupees. If there is a correction of 1,100 points, the 200 option goes from 200 all the way to around approximately 600. That is what we are assuming. There is no clear cut way, because there will be a lot of factors at that time as well. Theta decay, time value, sharp movements, expansion of volatility. But we are just for understanding purpose, we have taken that the option premium moves from 200 to 600. So 600 is where you will be. So आपने 30,000 कमा लिया by buying the 22,000 put option, because that is 600 into 25 into 2. So 30,000 is what you will earn, minus 10,000 which you have paid to purchase this particular lot size. So 20,000 is approximately what you will earn if there is a 1,100 point correction in the market and you have purchased the put option. See, in the cash market, if you have a portfolio of around 10 lakhs and if there is a 5% correction, your portfolio will get eroded by approximately 40,000 rupees. So you can hedge it to an extent. You cannot completely hedge it, but to an extent, if you hedge it, you will recover about 20,000 rupees by buying the put options. So that is what we just wanted to educate. This is what you can consider. It is not that we are recommending that you should do it. Anyone who has a cat portfolio should do it. It is just a strategy that traders who are active in the market and who want to hedge against major events can think of doing. I hope this particular slide is clear to everyone. If there is any questions related to this particular slide, we can take it at the end of the session. Now moving to key points to note while doing trading in the volatile market. See, volatility जो है, it does not mean that there will be a correction. Volatility basically means that there is sharp movements in the market. Take the scenario of COVID itself. COVID was a classic example. It was a black swan event. No one knew what was going to happen in the market, but there was extremely sharp movements. No one could predict also. One day there was almost 500-point movement on the upside. There was another day there was almost a 700-point movement on the downside. So volatility means sharp movements on either side of the standard deviation. मतलब एक average के ऊपर या नीचे sharp movements in the market is considered volatility. No one knows the direction of the volatility. So the important point is managing risk. Risk management is very important during volatile times in the market. There is a particular rule which is known as the 2% rule. So this is a very important rule that traders can consider. What the 2% rule states is, if you have suppose I would take a simple example that you have 1 lakh cash in your account, demat account. The 2% rule states that in any particular trade that you take, there should never be a loss of more than 2%. So that is the simple understanding of the 2% risk management rule. Let us take an example and understand this better. So there is a particular formula which how to apply it. I'll explain it in a very simple manner. So what this particular formula says is the capital that you have, that is 1 lakh into 2%, that is 2%. So that comes up to around 2,000 rupees. 2,000 divided by the entry price of what you're taking minus the stop loss price. So suppose we have a stock which is ITC. We have decided that the stop loss for that particular trade is going to be 15 points. So suppose currently ITC is trading at 450 rupees. 450 minus 435, that is your stop loss price. So 2000 divided by 15 is your position size. So that is very important to understand the position sizing formula. So the capital that you have into the stop loss, that is the risk that you are going to take, divided by the stop loss. So 1 lakh into 2%, that is 2,000 rupees, divided by 15. So that comes to 133 shares. So position sizing tells you how many shares you should take in any particular trade, so that if your trade goes wrong, you have a loss which is restricted to 2% itself. So according to this formula, if ITC is trading at 450 rupees, you maintain a stop loss of 15 points. Then according to the optimal position sizing rule, you should buy 133 shares with the capital of 1 lakh that you have. So I hope everyone has understood this particular concept of position sizing. See, position sizing allows you to tide the volatile markets, because there are traders who deploy their entire capital and do not maintain a stop loss when the markets are such volatile. If you lose out on your capital, it becomes very difficult to regain the capital. See, it is very important to understand that making money is fine, but if you do not protect your capital, it becomes very challenging. So protecting your capital is the most important thing when you're doing trading in the markets. So position sizing, I hope you have got the concept clearly understood. Position sizing is nothing but understanding the appropriate or the optimal quantity that you should purchase, so that if your trade goes wrong also, you will have a loss of just 2% on your invested capital. So according to this rule, you will have a number of trades at your disposal, where even if you go wrong, your capital will not be wiped off. You still have chance of coming back in the markets and trading once again. The other points to mention are psychological factors and reviewing your position size. See, you should not have such a big position कि आपके वो mental state को ही affect कर दे. There are a lot of traders who have 10 lakhs at their disposal and they'll put all the 10 lakhs in just one particular trade. That is a call option or put option, and then hope that that particular trade goes in their favor. Never do that type of trading because it gets a lot of stress on your hand. And whenever traders do trading with stress, most of the times it will result in a bad outcome. So do not take stress when you're trading. Deploy the capital which you are comfortable. Do not deploy significant capital that agar aapka trade wrong chala jaye, that will have an impact on your life itself. Do not do such type things, because ultimately you are trading to have a better life, not to make your life worse. So these type of things should always be considered. Please do not risk capital which may affect your personal life. And the last thing is position sizing also has to be reviewed. See, it may be that in the initial years of trading, you may be capital trading, you may be comfortable trading with 1 lakh capital. But gradually as the years pass by, आपका confidence बढ़ जाता है market में, you have a better grip at price action, better grip at trading in the market. You can gradually increase your risk. तो पहले जैसे आपने 2% का स्टॉप लॉस मेंटेन किया था, gradually you can increase your position size, you can increase the depth of your stop loss. All these things can be modified, but it has to be done in a gradual manner. Once you have been comfortable trading in the market and you have generated decent amount of capital on the invested capital. So this is also a very important thing. Next is maintaining a trading journal. See, these are all things which may look very small, but in a trader's life, when the markets are volatile, these are the things that ultimately help him and help him come out on the winning side. The other thing is maintaining a trading journal. See, maintaining a trading journal may seem very simple, but agar aap har din, if you are a trader especially, see, if you are an investor, it does not make much factor, because you will always have a trading journal, means you will get the statement at the end of the year. If you do 3-4 transactions, it's not mainly your worry. But if you are a trader, you should maintain a trading journal. You should record why you have taken a particular trade, why you have cut your position, what was the reason for you being trapped out in that particular trade, and other all the details you can mention in your trading journal. So gradually at any particular time, if you review your trading journal, you have a good understanding of the trades that you have taken, and your discipline while trading also increases. You will not randomly start taking trades in the market. You will approach the markets in a more systematic manner. And the last point is, when the markets get extremely volatile, it is better to do a diversification of the trades. So currently, if you see the markets are quite volatile, do not invest all your capital in one particular share itself. Consider a portfolio. A good optimal portfolio is anywhere between 15 to 20 shares is what you can consider. So that's about the background of the volatility that is currently there, the things that you have to do in terms of trading psychology that you have to consider. Now let's move on to the strategies that you can consider. जब भी market volatile हो जाता है, what are the strategies that you can consider in terms of derivative strategies, that is in the market? So the first strategy that we could recommend for traders, especially who are doing positional trading, see, अगर आप intraday trading कर रहे हो and even though the markets are a bit volatile, you can always square off your position if you are in front of the screen. But if you are considering to carry forward your position to the next trading day, it is always advisable, always advisable to do trading in a hedged manner. मतलब आपको मालूम रहना चाहिए आपका मैक्स लॉस कितना है, आपका मैक्स प्रॉफिट कितना है, right at the start of the trade itself. So it is very important to hedge your portfolio or your position, at the start itself. So a spread strategy is one of the best things that you can consider at the time of taking a position, because spread strategies limit your losses. See, like in today's trading session also, even though your view may not go right, but your capital is protected to an extent. See, because the selling of option of the higher leg limits your losses right at the start, and it's a well defined strategy, that is. So a spread can be either bullish spread, a bull call spread, that is, or it could be a bear put spread. Spread दो तरीके के होते हैं. If you have a bullish view, you do a bull call spread. If you have a bearish view, you do a bear put spread. So take the current scenario. Markets में काफी अच्छी recovery आई है, almost of around 800 points recovery we have seen in Nifty from the recent lows. A trader who wants to trade the current market, see, already we have recovered 800 points. You do not know how much more rally can come in the market, but your view is positive. So instead of buying a naked call option, what you can do is you can buy a bull call spread. So that is a type of strategy which is there in derivatives, wherein you buy the at the money call option, and in order to reduce your cost and protect your capital as well, means आपका cost कम हो जाता है, but your profits are also limited. See, it's not that you will have unlimited profits in this particular strategy, but you are comfortable with a limited amount of upside. So the scenario is you buy an at the money call option, and simultaneously you sell a slightly out of the money call option. So I'll just explain it with this current example. The what you do is, currently markets are closer towards 22,600 650 levels. We buy a slightly in the money call option, that is हम लोग खरीदते हैं 22,550 का call option. At the time of making this particular slide, the premium was around 100 rupees. What we do to reduce the cost is we sell the out of the money call option. So we sell the 22,750 call option. इससे cost काफी नीचे आ जाता है. The cost reduces towards 80. I'm not saying it's a massive reduction, but still it's a 20-point reduction in the option premium. So whenever the markets are volatile, the option premium of the option that you have sold also will be on the higher side, and that will lead to a reduction in cost. So this is the payoff chart of the strategy, that is a bull call spread. As long as the markets are above the break-even point, you will end up making money. Break-even point is an important concept to understand. It is just the total premium आपने जितना भरा है, that should be added to the strike price that you have purchased. So we have purchased 22,550 call option, plus the net premium that we have paid in this particular strategy is 80. So 22,550 plus 80, that comes to 22,630. ये आपका ब्रेक इवन पॉइंट है ये पर्टिकुलर स्ट्रैटेजी में. As long as the markets remain about 22,630, we'll end up making profit in this particular strategy. But do note that the profits will be locked. कितना भी अगर हमने ऑप्शन के कौन सा सेल किया है 22,750, तो निफ्टी कितना भी 22,750 के ऊपर भी चला जाए, will not make unlimited profits. It will be locked to a certain extent. So I hope you have understood this particular strategy. It is known as a bull call spread. A spread strategy mein you buy the at the money call option, and to reduce the cost we sell the slightly out of the money call option. Likewise you can do a bear put spread as well. तो bear put spread में आपको क्या करना है, you buy the at the money put option and you sell the slightly out of the money put option. तो ये example में what you would be doing is basically you buy the 22,600 put option, and to reduce your cost you will be purchasing 22,400 put option. मतलब you sell the 22,400 put option, sorry. So you buy 22,600 put option and you sell the 22,400 put option. तो इसके कारण आपका cost slightly reduce हो जाता है, and your profit and loss is fixed right at the start. Now moving on to another strategy that a lot of traders consider when the markets get extremely volatile. So volatility based strategies भी है market में, but it is generally used when the markets are extremely volatile. See, because a volatility strategy इसमें काफी challenges भी है. It may look very simple. So I'll just explain the strategy and I'll tell the challenges as well, because without explaining the challenges, no strategy is complete. So the markets currently are at 22,650. Now take the scenario that we are going into the election week, and we are quite close to the election week. So I have just taken this example from an understanding perspective. So suppose the markets are at 22,650. You know that the election results are going to come, the markets are going to be very volatile. You do not know what the actual movement in the markets are going to be. See, it does not matter if the market movement can be either on the upside or it could be on the downside. We are not much worried about that. what we are actually worried is market में movement आएगा या क्या नहीं, because if there is a sharp movement, this is a very good strategy to capture the volatility. I'll tell the challenges as well, but just understand the strategy for now. So what we have to do is we have to purchase the at the money call option as well as the at the money put option. So net आपको प्रीमियम भरना पड़ेगा. That is why it is known as a debit strategy wherein you pay premium. अगर आपको प्रीमियम आता है आपके अकाउंट में, it is known as a credit strategy. If you pay premium, it is known as a debit strategy. So you buy the at the money call option as well as at the money put option, not knowing in which direction the market movement will come, but you know that there will definitely be a sharp movement in the market which will exceed the premium that you have paid. So this is what we do. We purchase the 22,600 call option as well as the 22,600 put option. Net हमने जो premium भरा है, that is 140 points. So if there is a sharp movement in the market more than 140 points in any direction, either on the upside or on the downside, we'll end up making money. So I hope everyone is clear with this. Now, see, it may look very simple ki if you do not even have to guess the direction of the market, still you end up making money. It may look like the ideal strategy for many people during this particular time. But please do note that I'll tell you the challenges with this particular strategy. Please do note that whenever we go into the election week, this is the premium that I highlighted is for tomorrow's expiry. But when we go into the election week, the option premiums become very costly because even the sellers want to hedge their means they do not want to take excessive risk. They will charge a higher premium. Premiums get costly. So to buy the at the money call and put option, the cost capital will go up. The premium will be quite on the higher side. So the movement should be such that it overcomes the total net premium that you have paid. If you pay a premium of almost 300 to buy the call and put option, the movement in the market should be such that it is more than 300 points, plus it should overcome the time decay, because election ka outcome aate hi there will be a sudden drop in volatility and time decay not so much, but volatility which will crush the premium. Option premium jo महंगे hai, that will suddenly come down. It is nothing to do with you. It is just that the event is over. The outcome is known to the public. जो fear था market का suddenly खत्म हो जाता है. That results in known as an IV crush हम लोग बोलते हैं technical terms में. Wherein the IV, the implied volatility of the option premium comes down, which results in a drastic crash in the option premiums. So even though your view is right, even though there is sharp movements in the market, there may be a challenge in this particular strategy. So that is the one challenge that you face when you are doing long straddle or long triangle strategies in volatile markets. The movement should be such that it overcomes all these challenges that you face. Now coming to another point regarding risk. So this is the derivative part. I just want to highlight various option strategies that are there and the risk associated with each of these strategies. So अगर आप naked short selling कर रहे हो either of a call option or put option, it has the highest risk in the market because you do not know. This is especially when you're doing positional selling, because you never know that tomorrow is going to be a gap up or a gap down, and there is you could face severe losses if your position is unhedged. So when you're doing option selling, always consider to do it in a hedged manner. The least risk is there with buying of call and put options, because even if your view goes wrong, it is limited to the extent of the premium that you have paid. Neutral risk is there with spreads like bear, bull call spread. Then we have exotic combinations such as short triangle, condor, butterfly. So that is the pyramid of associated with the various strategies along with the risk associated with each of these strategies. The last slide is regarding the key points to take note of when you're doing trading in the derivative segment. Always maintain a stop loss. See, it may look very simple, but it is the key tool to manage your trading or limit the losses that you have when you're trading in the derivative segment. Stop loss can be in terms of fixed stop loss, that is fixed certain points or a percentage या फिर levels, anything that you are comfortable with, but always do maintain a stop loss. See, if you are trading in option premium, I'll give you an example. Generally, if the option premium is at the money, the premium may be anywhere between 80 to 100. Always, if you're doing in Nifty, if you're a scalper, that is, अगर आप scalping कर रहे हो, short positions capture कर रहे हो, points capture कर रहे हो, consider to maintain a stop loss of anywhere between 20 to 30 points, because when Nifty reverses by around 60 to 70 points, 60 points also, you will be stopped out. That means you more or less know that if you are a scalper, your view has gone wrong. If so, suppose the option premium is 100, you can maintain a stop loss of around 80 or 75 on the downside, that is on the option premium. Many traders will feel कि काफी बार क्या होता है कि सिर्फ हमारा स्टॉप लॉस टच हो जाता है, 74 तक आके वापस 100 तक आ सकता है. See, that is sometimes in the market, but if you do not maintain a stop loss, and what if the scenario happens that the option premium moves in one go all the way from 100 towards 30 on the downside? To recover from 30 and come back to 100 is a very challenging thing. It is almost tripling your capital. That is, it happens just once in a while. But if you maintain a stop loss, you have your capital, you can regain from around 75, you can come back to 100. So I would always advocate traders who are doing trading in the derivative segment, kindly maintain a stop loss. It does, if your view goes wrong, it does not mean that's the end of it. It just means that that particular trade of yours has gone wrong. You can always recover back in the market, and markets are not a one-off game. It is a consistent event that you have to continuously play, wherein you manage your risk in all particular scenarios. The next thing is leverage. Leverage काफी बढ़िया चीज है, लेकिन ये एक double edged sword है. So you should know when to use leverage, when the markets are in your favor, when the markets are not in your favor. Like the current scenario, the markets are not so much so in your scenario, especially index trading. But stock specific trading, definitely the markets are quite good. काफी सारे stocks में अच्छी खासी movement दिख रही है. So it's not a saturated market in terms of mid cap, small cap stocks, but definitely for index based trading, the index, if you see from the last 3-4 trading sessions, has been relatively range bound. भले ही निफ्टी के चार्ट पे आप देख रहे हैं कि इंडेक्स कंटिन्यूअसली 4 दिन से ऊपर है, but that is just gains of 20-30 points on a daily basis, and in the current scenario you cannot make much money when the index is relatively range bound. The last important point is hedge strategies. अगर आप इंट्राडे कर रहे हो ट्रेडिंग, स्कैल्पिंग दैट इज, you can still do naked buying of call and put options, because you will mostly be in front of your screen. व्यू गलत भी गया तो आप कभी भी आपका पोजीशन काट सकते हो. But hedging comes very important when you do positional based trading, because if you take a trade which is not hedged, even though you are 100% sure that tomorrow the trend will be on the positive side, there can be any negative event overnight which will result in the markets opening gap up or gap down. We do not know what may happen on any particular day. So it is very important to hedge your position, because if you have taken a long position and there is a drastic gap down opening, you will not be able to close your position and there will be significant losses. So it is always better to take a hedge trade when you're doing trading in the derivative segment. You can either do a combo position, or you buy a put option and hedge your position, or you take a short position in the futures market. Whatever is your comfort, you can do according to that, based on the capital at your disposal. So that's an end of today's session. I hope everyone who attended the session was able to gain something out of it. Thank you so much for having taken the time out and having attended today's session. Please do note, like I mentioned, that we regularly share our views regarding the market, both on our Telegram as well as our Instagram, as well as our Twitter handle. Telegram channel, everyone is free to join. You can join our Telegram channel as well as our Twitter handle. We'll be more than happy. And all the interesting content that we have regarding the markets, as well as the levels, India VIX, whatever readings that we have on the market, we regularly tend to update it on these platforms. So thank you so much. I would like to thank the participants once again for having taken the time out and having attended today's session. And now we can start with the Q&A session. Anyone, if they have any question regarding today's session, please do ask it. Thank you. Sir, I will not be able to give stock specific responses. If you have any queries regarding the topic at hand, we'll be more than happy to discuss it, sir. I would not be able to take stock specific questions. So there is a question, can we go for a long straddle on the election result day? See, predicting right at the time itself, now only key we should go for a long straddle would not be advisable, because it is a scenario by scenario that you have to play out. No one knows the verdict, what will actually come out. No one knows the premium levels on that particular day. But definitely it is a very good strategy if the view is positive and the outcome also comes in that particular scenario. A bull spread is a good strategy. That is a long straddle, bull spread strategies. Long straddle. So long straddle will be you do not know. See, that's what I'm telling. The premiums are not known right at the start itself. It's challenging because, like I mentioned, there will definitely be an IV crush. So it is a view that you have to play out, that you want to play the IV crush, or you want to see that there will be such a sharp movement in the market. But definitely, when the results, when the days come, we'll definitely be sharing our strategy as well from the SBI research side. Yeah, so someone has asked for the Twitter handle and Telegram ID. So I'll just share the Telegram handle one second. So I've shared our Telegram handle. Anyone who wants to join the Telegram handle can do so. Twitter पे भी आप you can just type SBI Securities, you will get the verified handle of SBI Securities. Instagram also the same is applicable. I'll not be able to share at present the Instagram and Twitter handles, but I have the Telegram handle at my end. आपको सिर्फ you just have to search the SBI Securities का official Twitter handle as well as the Telegram handle. Next time I'll definitely keep it with me, so I'll just share it directly. So I'll just take a few questions which are there. So there is, we have received a thank you. So thank you to you too, sir. Jay Kumar has appreciated our session. We also feel very happy when the participants learn something from the session. We definitely, I will be taking multiple sessions in derivatives and technicals along the way, and regularly I'll be updating my content as well. So if you have any feedback at your end regarding any topics as well, I'll be more than happy. So then we have a question from Siddharth. Is it true that when FIs sell cash, they buy futures? I don't think that's true, because our current scenario, if we see the May series especially, May series, what we have seen is right from the start of the May series till all the way towards now, we are on 22nd. Just 1 2 days in the cash market, there has been buying from FIs, and even the short positions in the future segment, index futures, that is, has been on the short side, because the FI long short ratio, that particular data also is available, and the cash position data is also available. The only thing challenging thing to know is whether they are buying positions in futures, stock futures mein what is their position, and no one will actually come to know that particular thing, because cash is the only place directly you know that they are selling. Definitely there has been selling, but from a speculative side what they are doing in the future segment or in stock options is very difficult to predict. So, but definitely there has been selling in cash from the FIs. They have been doing it from a very long period of time. FI holdings in the cash market have come down drastically. It is almost closer towards the lows that we saw in 2012 levels. Till there it has come. So that is a thing we have observed. And even in the futures segment, that is index futures, they have been net sellers. This particular data is based on the FI long short ratio. That particular thing is currently around 30-32 levels. So over there also there has been selling by the FIs. It's difficult to predict what they have done in the stock options and stock futures segment. So that this I hope I was so Vivek Bhatt has asked this particular question. Currently, the premium for Bank Nifty expiry, that is 5th June, is very high. You mentioned that results post the results, VIX will go down and the premiums will drop suddenly. Does it mean that we should refrain from buying? If you can do that, it's very good, because that particular day, see, that particular week will be very challenging in terms of IV crush, because I have observed it many times that post a particular event, that the premiums, even though you get your view right, if you are buying call option and even if there is sharp movements, the option premiums will not move at the same speed as before the event. You can compare it, you can do a trade and you can check, but ideally either the view should be such that there will be such a sharp movement in the market that it will overcome the IV crush as well. See, IV crush and volatility is different things, but it is more or less the same. See, VIX is based on option premiums of far out of the money options, and IV is the implied volatility of any particular option. Both the things will definitely come down post the event. That is, IV also is going to come down, and VIX also we believe is going to come down post the major event. So if you want, you can refrain from doing trading on that particular day, or if you have a view that the government if there is a stable government and there is extremely sharp movements in the market which will overcome the IV crash, then you can do buying of options, or else that you can do neutral strategies as well. If you feel that the IV crash is going to be such and the markets can go, it's not necessarily the markets may be volatile itself. The markets may go into a consolidation also on that particular day, and you can do selling based strategies as well. If you do in a hedged manner, you can consider doing option selling as well, as long as it is hedged. Do not do naked selling of options on that particular day, because definitely the market will be a bit choppy. So there is a thing that if the election result day, I would difficult to predict the strategy right at the current juncture itself, whether we should go for option buying or option selling. We generally tend to be on the option buying side. I agree with you that there will be an option IV crash is going to be there, but predicting the strategy right at the current juncture will be a challenge, because we tend to play it more on a day-to-day basis, because that particular day no one will know the actual movement. But definitely these are the factors that you should be tracking, whether there is going to be an IV crash, whether the VIX comes down. There could be a chance that the VIX continues to increase on that particular day also. We cannot know, we cannot predict, but we have historical data which tells us that VIX generally post the event comes on the downside. So should we refrain from buying call put option, because even if the view goes right, premium may suddenly drop, right? So that is an observation that I have seen generally when there is an RBI event or whenever there is a Fed event, post the event, the option premium suddenly decay in the premium which comes about. So what you can do is you can wait for a time, you can let the premiums decay. So you'll get the premiums, option premium at a slightly lesser price. That is, you'll have to give up because no one knows how the movement may be. It may be that you may miss out on an opportunity also. But if you give a bit of time for the markets, let it cool off, let the IV premium shrink, then you can consider to take a trade. And even though there has been a decay in the option premium, you can trade in either direction. So give the markets a bit of time. There is no need to rush in and take a particular trade on that particular day. So there is again stock specific, sir. Like I mentioned, I will not be able to take stock specific questions in the current seminar. You can definitely post the query to your dealer and he will get in touch with the research team and then we'll definitely respond to your queries. If there are any questions related to the topic that we have taken, I'll be more than happy to respond. So it looks like at the current juncture, we do not have any questions. So I'd like to thank all the participants once again for having taken the time out. I hope I was able to explain the concept in a relatively simple manner. Definitely, we'll be having a lot of sessions in the months to come on various topics on technicals and derivatives. I'll be trying to make more and more interesting content based on the response that we get. So, thank you so much to all the participants today for taking the time out and having attended today's session. Thank you. So I just wanted to highlight that all the links for all the social media handles have been pinned in the comment section. So for Twitter also has been pinned and all the social media links are available. So if you check the description, you will be able to join our handles. I would request all the participants to kindly take a view regarding our Twitter handle, our Telegram channels, Instagram IDs. So if you like the type of content that we post on our channels, please feel free to join our handles as well. There is a lot of very informative information which is posted by the analyst from the research side, as well as a lot of other content as well, which may be useful for you from a trader or an investor perspective. So do give it a check out, and if you like it, definitely follow us on Twitter, Instagram, and Telegram. Thank you.